Hello and welcome back to a weekly market recap by myself this week. And full transparency, having to film this on a Thursday. So when I do the full market recap, it will only be through Thursday. So this past week, we saw the market fall 4.03%, which brings us year to date still up 13.84%. This has actually been the worst week we've seen performance-wise in the S&P 500 this entire year. If we jump into the market, what we see throughout the week is we start off and halfway through Monday, we experience a pretty sharp sell-off. And then from there, relatively stable for Tuesday, Wednesday, Thursday until midday. And then we start to see another sell-off, and then we sold off into the close on Thursday. Now, a lot of this volatility and sell-off has to do with what we are currently experiencing in Congress. So let's just talk for a minute about where we are in Congress. We started off this week with three big major factors going in. One, can we extend the government shutdown? It's supposed to shut down on October 1st, this Friday. What's going to happen? Two, we have a $1 trillion infrastructure plan that's ready to be voted on in the House, passed, moved along. Three, what are we doing with the debt ceiling, and is that directly tied to the $3.5 trillion infrastructure plan or separate? Let's unpack where we are currently. As of Thursday, we did get a vote in the Senate to extend the government, so we no longer have to shut down October 1st. That's a really good sign. But where we're still seeing a massive stall is in raising the debt ceiling. And right now, the Republicans don't want to vote for raising the debt ceiling, because if they do that, then everything moves forward. The Democrats can use their budget reconciliation on the $3.5 trillion infrastructure plan, the soft infrastructure plan, and move forward on that front. If the Republicans don't vote at all on raising the debt ceiling, then the only way that the debt ceiling would be raised is through the budget reconciliation. And then if the Democrats have to use it on raising the debt ceiling, they can't use it on the $3.5 trillion plan. If they want to combine both, that is, raise the debt ceiling and get their soft infrastructure plan passed, they need to do so before we run out of money and default, which would be October 15th. Now, the reason why the market started selling off this week, there was a lot of hope that we would be progressing through these different factors and moving forward. Now, it's not unfeasible that we don't get the $3.5 trillion soft infrastructure plan, but now with the progressives in the House on the Democratic side, we might not even get the $1 trillion hard infrastructure plan if we don't get the $3.5 trillion soft infrastructure plan. So I think both of those are pretty big shocks to the market. It's now trying to price in, what if we don't get either of these infrastructure plans passed? And then on top of that, we have the fear around not getting our debt ceiling raised. The US has never defaulted on their loans in the history of the United States. Defaulting, as Jerome Powell and Janet Yellen have said, would potentially send us right into a recession, isn't likely to happen. We think that no matter what, whether the 10 Republicans end up joining with the Democrats to raise the debt ceiling, or the Democrats use their budget reconciliation to raise the debt ceiling, either way, we don't think it's likely that the US would not raise it. But the market is starting to fear, well, what if something doesn't get in place? And I think we've been seeing a dramatic sell-off due to those factors. Now, if that wasn't enough drama in itself, now we have on top of it Joe Manchin, who is needed as one of the 50 votes. There's no leeway here. You need all 50 Democrats to support the budget reconciliation. He came out and said 3.5 trillion is way too high. In fact, not only is it too high, there's reckless spending involved in it and punitive taxes. So he has come out and said he would like to see something way more along the lines of 1.5 to 2 trillion, Now, Biden has said, look, 3.5 was our negotiation. We started at 6. So the Democrats don't even have their entire order in line to be able to vote on this 3.5 trillion infrastructure. We still need the debt ceiling passed. We're still trying to get the hard infrastructure, $1 trillion bipartisan infrastructure agreement passed. And until Thursday, we didn't even know if the government was going to stay open. So Congress is a mess right now. And because Congress is a mess, the market is selling off. Now, September is the first month of the entire year that we've actually ended the month negative. Every other month we've increased the S&P 500. In September, we sold off. One thing to look forward to or to look at is if we do see a rally in October, we normally see that rally continue until the end of the year. So that's something that we will be looking for. We'll be looking to see what areas are performing well. Earlier in the week, the technology sold off heavily, and the value plays, financials, energy were performing well. And then later in the week, we actually saw the reverse of technology leading the way higher and energy, financials, the value plays selling off. So we're really just seeing a seesaw, and unfortunately right now, more of a seesaw down into a sell-off. But either way, appreciate you guys tuning in for this market update this week where I'm solo. As always, we're here to support you. Your money's here to support you. I'll see you again next week.